What's going on, traders? It's your boy Snipe Huncho, and welcome back to a value-packed video. Before we get into it, smack that subscribe button if you're new, hit that bell button, and smack the like button because it really helps me create more value content. Keep commenting too, because if you give me something to aim at, ultimately, I'm going to hit that target. Snipe Huncho. All right, so without further ado, we're going to go ahead and get into today's topic. And that's basically sniper entries, right? But before you become a sniper, you got to go through basic training, right? That's what I had to do. Literally, in 2018, I came up with the alias Sniper Huncho at some conference that I was at in Atlanta. And everybody started calling me that, right? And I vowed to become the very best, right? The most accurate trader that I can be, right? I'm not going to compare myself to anybody else. I want to be the most accurate trader that I can be. And that led me on a series of different entry techniques all the way up to the entry technique all the way up until the entry technique that I use today, right? And that is one of the most accurate entry techniques out there, in my opinion. And if you learn to do it effectively, I promise you your trading is going to get taken to the next level. So how do I hunt my entries down? Right? There are three things, right? 3 steps, 3 rules, if you will, that you need to learn for accurate entries, all right? Or more accurate entries. Is this going to be 100%? No, obviously not. There's nothing in the markets that's going to be 100%, but there are high rated concepts, right? And this is one of those. Okay? So, get out the notebooks, get out the pens, and take some notes, because note takers are always money makers, right? And without further ado, the very first thing that you need to know is area of value, right? You need an area of value. And I like to call these AOVs, right, for short. Okay? You need an area of value. And what is an area of value? An area of value is an area where traders are in agreement. Okay, so that will literally be any type of range, no matter how big, no matter how small. Any type of range is an area of value. Okay, and for example, as you can see, these 3 candlesticks here, this is a 4-hour time frame. This is literally 12 hours, right? 12 hours price literally was in this box. Okay. So price is in there for 12 hours. This is literally a small range. If I go down to a lower time frame, I promise you, you will see a lot of data within this box. Okay. Now, the thing is, it's the same exact concept as finding your directional bias on the 4-hour time frame on the overall ranges, like the big ranges. Just go to my last video. Literally, it's going to be popping up right there at the top as of right now. 3, 2, 1. All right. That video literally is going to tell you how to get your directional bias. So it's the same exact concept, it's just on a smaller scale, right? The smaller scale is going to help us with our entries, right? Overall, it's going to help us with our directional bias. If you shrink that, it's going to help you with your entries, right? So in this case, we're boxing price in here. If we're expecting price to go down overall, we want to ultimately enter above this area of value, okay? You want to get a discount. What do I mean by a discount? A discount is basically if you go to the store and you see a bottle or a case of water that's usually $6 and it's 50% off and it's $3, you're probably going to get 2 of those because it's a discount, right? Same exact thing here. You want to get in the best possible price that you don't have to pretty much pay anything to get in. You actually get paid more if you do this correct. Right, so in this case, a discount above the area of value, if you're looking for a sale, would be high. It'd be above that area. So your entry has to come up here somewhere. Right, so that's number 2. That's that rule number 2. Right, you need the discount. Right, you got the area of value, you need the discount next. All right, and the last thing that you need to do to enter into the market is to have an entry trigger. All right. Can't type today. All right. Entry trigger. These are the 3 things. And I promise you, it's simple. If you keep it simple, don't overcomplicate it. it'll take your trade to the next level, right? Area value, discount, and then your entry trigger. And your entry trigger is going to come on a lower time frame. I like to pair the 4-hour time frame with the 30-minute time frame, okay? So the 4-hour time frame, now we're on a 30-minute time frame. If we scroll back, bear with me, my laptop's acting kind of slow for some reason. All right, so we're back over here in this area. Now check this out. This is that box right here. I think I already had this drawn. Boom. So this is that box on the 4-hour time frame. Remember I told you you was going to see a lot of data here, right? It's respecting the high and the low of this range. That's perfect. All right. So in this case, if you're looking for a sell, like I said, you want to enter above the area of value. Now check this out. When price finally moved up, right? It broke down first, right? This is the first time it expanded the range. Cool. All right, and then it went long. All right. Now we're in the area where we want to enter. We already weeded out the buys. All right. Obviously, if it breaks out low, you're gonna look for a buy, but we already weeded out the buys because we have a short directional bias in this case. Okay. We have a short directional bias overall in the 4-hour time frame, so we know that we're only going to be looking for sales, which only requires us to enter above the area value. So now we're up here. We're going to look to enter the market. So before we do that, notice this one. We have another baby area value that popped up on a 30-minute time frame. That's good because if we're looking for shorts, we're only going to enter above this area value. So it's kind of closing in the area that we're going to enter. In this case, this is not going to always happen. This is just one of those rare moments, right? But it takes a little bit more of the guessing out. It lets you know that, hey, well, if you're going to enter to the market, it's going to be above this box now. So it's going to be above both of these boxes, which is pretty good. It's pretty sick. But we have a problem. We don't have an entry trigger up here on the 30-minute time frame. All right, so I'm always monitoring all of my time frames because I need to know where the entry trigger is going to come. If the 30-minute time frame looks ugly like this, I need to find an entry trigger because I need to know where I need to enter in the market and where I'm going to put my stop loss at. Right, so I'm going to drop down to the 15-minute time frame, okay? And we're going to see if we can find an entry trigger in that same area. Right, if we zoom in, no, we don't have an entry trigger, okay? I don't call any of these entry triggers. If you see something, that's you. But for me, I have no entry triggers here. So now I'm going to my last resort, and that's the 5-minute time frame. So I'm going to go ahead and zoom out. Scroll back. All right, almost there. There we go. All right, boom. So now in this area, I see two entry triggers, okay? We have a minor 3-bar reversal here, a minor bearish 3-bar reversal, and we have a major bearish 3-bar reversal right here, all right, on a 5-minute time frame, okay? So a minor 3-bar reversal is basically you have this bullish candle here, you have a weak bullish or bearish candle, doesn't really matter which one it is here, and then I'll love for it to be bearish, but if it's bullish, it's fine, as long as it's not like too bullish. Right now, in this case, I'll check it out. We have a bearish candle here that engulfs that baby candlestick, but it's minor because it didn't reach the extreme of this initial candlestick, right? It didn't reach the extreme. It's minor because it's literally half the body. I only call it major if it's even or if it exceeded it, right? In this case, it's pretty much even, so that's a major 3-bar reversal to me. If it exceeded it and it went further down and closed below, even if it wicked and came back, as long as it didn't come retrace all the way back, it's still a major 3-bar reversal to me. So in this area, either or are still valid entry triggers. It's just one of them is a stronger trigger, which is this one is stronger than this one, right? So in this case, this is an entry right here. Stop loss above the 3-bar reversal. All right. And you will target ultimately the bottom of the range first, right? And that's 1.3 times my risk. I like at least 2 times my risk. Right, and now that we expand it down, this is a cool little extra add-on that you can take notes. That first expansion down, that can actually be used as your initial take profit target as well. And that gives me 2.21 times my risk, right? And this is really good for day traders as well. Like, if you just want 2 times your risk in that day and that's your goal and that's all you need, literally, this can be your only take profit. That's 50 pips, 2.21 times your risk, and you're fine, right? If you're a swing trader, this is fire because literally, if you're on a 4-hour downtrend, you can hold this for days, even weeks, possibly even months. That's more of a position trader from, like, in my eyes. I don't really do that, but I do a bit of swing trading. I'll hold on 3 days at a time. Anything more than that, I really don't do that. I know there's traders out there who hold for weeks at a time, or whatever the case may be. The most I ever held a trade was 3 days. But I bounce back and forth between both worlds. It depends on what the market is offering, right? So the second entry right here, this will be a nice scale in. It'll be right here on this major 3-bar reversal, and then your stop loss could either be here above this 3-bar reversal, or you can do it above the very first one, right? It's nothing wrong with putting it right here, because literally you got into the market because of it. So if it goes above it, you'll get out of it because it's not respected anymore, right? And then you can literally target the same exact low. That's almost 2 times my risk for day traders. Or if you're a swing trader, I mean, I don't know if you trade with a stop loss without, or if you trade with a take profit without a take profit, it's up to you. It's whatever you do, you can just incorporate this on in your strategy. But I just want you to see how far this actually went down, right? These entries came around 10 a.m., right? So later on that day, literally the same exact day, literally by noon, you're up 4 times your risk on this position, and probably around the same on this position. Literally 5 times your risk on this position. Look, that's still a nice day trade, right? But just don't get too greedy using this, I promise you, because sometimes it will burn you. But in this case, like I said, it just kept going down, even on a 4-hour time frame. If you go back to it, let's look how far it actually went down. Okay. If we entered up here, literally we saw an extreme of 600 pips, right? And it was coming up on 2 months, literally, or it was about 50 days that you could have been holding this if you're a position trader, or if you're that type of trader, right? I'm not, right? I would love to be one day, but as of right now, I'm not. So I'm cool with just getting a lick of the knife and just getting out and coming back the next day. But if you are that type of trader, literally, you can just keep looking at these area values where price literally just evens out. And like I said, look, this would be another entry above this area of value. This is your discount area, right? This is your discount area. You're going to enter somewhere up here on a lower time frame, and you're going to take it down, right? This is key for swing traders, I believe, simply because when you get into the market, right, and you're going to be holding so long that anything can happen to price. Anything can happen, right? Price can have, like, literally big swings. It can hit you out before it even goes overall your way. And I know that can be pretty frustrating for swing traders, right? But if you get more accurate on the entry end, you literally will be in a better position, right, to hold those trades and feel safe about that, right? So in this case right here, well, we could enter somewhere above that level. So if we go down to the 30-minute time frame, let's see if we get an entry signal over there. All right. Our entry signal is going to literally come above here somewhere. And look at this bearish engulfing candlestick here. That could have been an entry. There was a railroad track right here. That actually could have been the very first entry. Okay. If you go to the TDI, you literally can see how it was downward movement here. But in that same area, there was upward movement in the market in price action right here. So that's bearish divergence. So that's kind of confirming, like, hey, we're getting exhausted to this upside. Let's start looking for sales. So once you see these sell signals start popping up, you're like, hey, we're above area value. We're literally at our discounted price. Let's go ahead and take some shorts, right? And in this case, if this is the very latest entry on this bearish engulfing right there, stop loss above the bearish engulfing or above the candle that it did engulf, or for the safest one, above the swing high, right? So if we come here above this actual candlestick, the reason that we got into the market, then what happens? We target the low of that range initially for all my day traders, and that's a whopping 4.3 times your risk. Yeah, you held it for a minute, unless you're that type to get out when it gets near it. There's a couple different ways to trade this. So you can use a dynamic risk. I like to call it evolving risk. I forgot who it was. Trader Dante, I believe, over the pond. He uses this or it's called evolving risk. So you always measure your risk as price goes down, and he always gets out when it comes to point two. When it's 0.2 times your risk now, so say price is down here, you will get out because basically you have a lot more to lose than you have to gain right here. Like it's pretty much not even worth it in that, because hey, yeah, obviously if you're risk free, that's fine. You have nothing to lose. It's a risk free trade, but it's really not a risk free trade if you've seen a high of pretty much 50 pips, right? So if price did turn around, you pretty much gave 50 pips back in that case, right? So it's not risk free. It's just the risk evolved to you having to risk your profit that's on the table, right? So when it gets to point two, it's pretty much not even worth it in his eyes, right? So I like to use that a lot of the time, especially if it's getting late in the day. If you're that position trader or you're a swing trader who likes to hold their positions for a long time, that might not even bother you, right? You can catch any of these other retracements, right? So you can even see in this area on a 30-minute time frame. This works on all time frames. You can even see this little area where price barely moved. You can box that in. That's the area of value. What happens? Price moved above it, right? It literally made an M. Boom. You know we like them M's and W's. It literally made an M. Crazy. You could have entered off this bearish engulfing here. That's a nice bearish engulfing to confirm the M. All right. And on top of that, you can even see the M on the TDI right there, right? So on 30-minute time frame, bearish engulfing, boom. Stop loss above that. That's a 7.5 pip stop loss on that bearish engulfing. All right. And if you're looking to swing trade this, still, like, literally prices that have to move that much to give you a return on your investment. That's 8 times your investment if you target this low right here, right? If you're swing trading it with no take profit, like, just look at the potential of all of this, right? Look at the potential of all this. Same exact thing. We're in a downtrend overall on the 4-hour time frame still, right? So we're only looking for those discounts, right? Coming back down here, you see this area of value there, right? Area of value there. Yeah, we broke out down, right? So in this case, you should still be hit on your hands, even if you're in the trades from the past. You should still be sitting on your hands, right? But guess what? It still reversed, came up, gave us a minor 3-bar reversal right here. It's still an entry trigger right there. Boom. 13 pip stop loss or take profit. You can target that low here. Boom. Look at that. 5.6 time risk for my day traders and the moon for my swing traders, right? Literally, you can even see over here to the left a little bit. This was another entry. Look at these area values right here. Boom. You can even see when price just has a lot more sideways movement than up and down movement. You already know an area of value is in that area, right? And look at that 3-bar reversal right here. Fire. Look at that entry. Stop loss right above the pattern, right? If you target the low, there's 1.94 times your risk on them day traders, right? It's literally that simple, guys, right? We can even go here. Check this out. We reversed. 30-minute time frame. Boom. It came below. This is your discount. And it rallies, right? Came below, it rallies. Right? Now, in this case, check this out. Another trend change. It consolidated. I'm pretty sure you guys are getting it by now. Consolidated above it. Look, 3-bar reversal. Literally. 3-bar reversal. Stop loss above that. Boom. It's literally crazy because price revolves around these area values, up or down. Either way, it revolves around it. You just have to stay plugged in so you know what you're looking for, what you want to do. Right? Let's go to a different pair real quick so I can explain it just a little bit further. Right? It's not going to hurt. Let's go to the 4-hour time frame. Let's delete some stuff. All right. Boom. Look at these buy models down in here. Check this out. 4-hour time frame. Look at that. Sideways movement. Price went down, gave us a W. You know we like them W's, right? Now we will enter off of this. In this case, there's a couple different entries we can do off of this. The very first entry will be the most riskiest entry. So it'll be basically let me grab this trend line, boom. So at the open of this candle, like the close, like in that area, like where the wicks meet the body on that average, you would wait for price to come back and reject that, right? So the very first thing you can do right here is either when price is up here, right? So it'll look like this. You know what? I'm tripping. I have the thing. I can just do bar replay, I believe. All right. So look, check this out. So price is here. All right. In this case, it's like, all right, bet. I like W's and M's. So in this case, and I know that we're going to be, or we're already below value. And a hint right here, write this down. You can look for M's and W's above and below value, right? Like they pop up a lot, as you've seen. This is our second M or W, M/W that we saw so far. Okay. So in this case, our stop loss will be below this level here, and we would target the high of this range initially, right? For especially for my day traders or people who just want to get them quick plays, right? And then let's go ahead and play these bar by bar. You are activated here, right? Boom. This is why I say it's risky, because that could have easily closed below and just kept going, took you out, right? But at the end of the day, you're just betting on a couple things to happen. You're betting that this price is going to hold and that price is not going to go below this level before it holds, right? And that, in this case, it paid off. So you could put a limit here, especially if you know you're going to go to sleep and you're like, okay, I might miss this move if I'm asleep. You can put a limit here. I do this all the time, right? Sometimes it'll lose, sometimes it wins. I'll be a liar if I sit here and tell you that this is going to win every single time, right? But I'm letting you know right now, don't be surprised that if you didn't get a rejection here and you just entered because it's a price, right? Which is not a dumb thing to do. It's smart. It's just more risky. That's it. It's just more risky. If it didn't reject and it just kept going, hey, that's the risk that you were willing to pay. In this case, it paid off, right? And literally in the very next couple candles, target was hit, right? Boasting 4.9 times your risk, right? That's the most riskiest entry. The least riskiest entry will be waiting for a bullish rejection. So in this case, you got this bullish rejection candle here. Enter on the close of that candle. So it'll be right there. And you can put your stop below that, or you can put your stop below the lowest candle right here, right? Which is going to be the safest. I'm always going to say do the safest, but this is always going to give you a better return if you do the closest one, right? And at the end of the day, it's still valid, and it's valid because you entered because of this candle. So you want to get out if price was to go below that candle, right? You want to target the higher that range. That gives you 3.5 times your risk, and you're good. If you're aggressive, you could have entered at this level. As it rejected, you could have entered because it closed bullish, and you could have had two entries here. Like it's literally endless amounts of opportunity, right? It's literally simple. Like let me know if this is making sense. Like give me feedback in these comments, because it really helps me create more value content. When I know what I need to cater to you guys, like if you tell me exactly what you need me to do, that it's going to get done. Other than that, I'm just going to do what I know best, and I'm going to just put it out there. Right? So guys, like seriously, let me know. Give me some feedback. All right. Let's keep it going. Let's see if we can find another example for you guys. Just one more. All right. Boom, check this out right here. Let's go ahead. Let me go back a little bit, because you've seen it just happen. You've seen it just happen on this 4-hour, boy. You've seen it. Look at that. Look at that. Look at that. Look at that. Boom, right? Average price. What we going to do? We move to the bottom. Sweet. Now let's go to that 30-minute time frame, all right? Cool. Let's see if we can get an entry signal. All right, let's see if we can get an entry signal. Look at that. A major 3-bar reversal. We're going to enter here. We're below value. We're in the uptrend on the 4-hour time frame. That's perfect. All right, stop loss is going to be below that low. And our first take profit is going to be here. That's going to be 1.8 times our risk. I like 2 times my risk, right? So you can, if you're in the uptrend, most likely it's going to trend past that. The reason that we target this first is because we know it's going to most likely trend past that, right? In not in all cases, but in majority, almost all cases. Okay, I'm gonna say almost all cases. I'm not gonna guarantee you anything, guys, but I'm just letting you know what from my expertise and what I know. We target this because that has to get taken out because liquidity is above it. So we know math says, my stats say that 90% of the time this gets taken out and it trends past that. Okay, you get 3 pushes in a trend. We know this. Look, 1, 2, and then what? 3. Okay, we get 3 pushes in the trend. Look at these baby trend. Look, 1, pull back, 2, pull back, 3. Right on these trends. Then we get some sort of retracement, whatever the case may be. So we can expect a possible 1, 2, 3 in this. So if I want 2 times my risk, I'm gonna just move it to 2 times my risk. I can just target that high up there or something, all right? And then let's let it play. Boom. Target hit 2.92 times my risk. Sweet. Right? If you want to keep holding, it might have kept going, right? Because this is only 1, pause, 2, so we can expect probably 1 more push up. And there we go. We made a new high. Sweet. Right? Let me know if this guys is making sense, because this is like some heat. Like, this is some heat. I've been sitting on this for a long time, and it's just evolved, right? It's literally just evolved to this now. And this is like very, 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 very accurate. Like, I can't even really show you where it doesn't work sometimes, because it literally works a lot of the time. Like, it's harder for me to find one that doesn't work than it is to find one that does work. That does not work, right? It does work. Whatever. The case is, it works. But in some cases, like I said, it's not going to be 100%. So I'm going to go ahead and hunt down areas where it may fail. Okay. So let's see, guys. If you're in sync with the higher time frame, guys, it's going to be hard to lose. It's going to be hard to fail, right? So the only time it's going to fail is if you weren't in sync with the higher time frame. So if you are, let's see, check this out. This area here, right? And you can see these even highs, even lows, right? What do I count even highs and even lows? It has to be at least 2 touches to either side. So you have a touch here, and you got touches over here. And then, of course, you got 2 touches, or maybe like 2-ish, 3-ish touches here, right? So in this case, we move down, and you think that, hey, it's going to give me a W, and then you buy, and then it keeps going down. Well, I mean, it wouldn't have happened if you, first of all, zoomed out, right, and saw that we were in an overall downtrend. You shouldn't even be looking for buys in this case, right? You should be looking for only sales, right? Let's keep going, right? Let's see if we can find one more that does not work. Okay. Check this out. This is a good one that didn't work, right? So we're in a downtrend, remember that, but we're going to pretend we're not, because it happens. We're human, right? So in this case, we come here, we look for buys because it breaks out low first, right? And we say on a lower time frame, I'm not going to go to it, but say we're on a lower time frame and we get an actual 3-bar reversal, or wherever the case may be, right? In this case, we did actually get a 30-minute bullish engulfing right here. So say we bought, we can either put our stops below there or stops below that bullish engulfing. I'm gonna do it below the engulfing. Now check this out. In this case, you got paid if you targeted the high of this range, right? This is an expansion phase. This is the initial expansion, right? So it's not the main move. It's always going to be an area of value, then it's going to be an expansion, and then it's going to be a trend. All right, it's going to be phases, right? It's going to come in phases every single time, and in that order: area of value, expansion, trend. Right? So this was just an expansion. If you were going to be targeting anything higher than this, you wouldn't have got it. You would have literally barely missed it, and it would have turned against you and stopped you out, right? But if you targeted the high of this range, you would have got it ultimately, and it would have been nice. It would have been two times your risk. That's not bad at all, right? Not bad at all. And if you were really plugged into and really fully invested to the upside, you might have used this as a scale in, and it would have burnt you, right? You could have, because this is literally a signal that I would scale in off of if we were in an uptrend, right? So stops here, and then you could have targeted anywhere higher. It literally didn't even give you anything really, right? Probably thought you was going to be winning here, and then it turned into a doji, and then guess what? Now you have a major 3-bar reversal against you. But instead, in this same exact case, what happens? We're above this area value in a downtrend. This is what you should have been looking for, right? And then right here, boom, you could have waited for the close of that, and then you could have put your stop loss above that, and then you could have targeted the low of this. Initially, that's 4 times your risk with a 20 pip stop loss, right? You could have scaled in on this major 3-bar reversal close right here with your stop loss either above that engulfing candlestick or above the whole entire level, and then you could have just swing traded and just held it for the entire for the majority of the time. You could have just targeted lows on the way down. You could have targeted this low over here, and what happened? Price took it out, 1.8 times your risk, right? You could have targeted these lows down here, boom, right? What happens? Market eventually takes it out, right? It's going to be a while for 3 times your risk. I don't know if you want to hold that long for 3 times your risk, right? Oh, this is a 30-minute time frame, so it's not super long. It's literally just, actually, it's kind of long, 6 days. Like I said, I've only ever held for 3, but people out here holding for weeks, that's fine. That's perfectly fine. Do what you do with this, right? So with that being said, guys, like, that's the gist of getting sniper entries. I'm not going to expect you to be good at it overnight. Some people might catch on it faster. Some people might take a minute to get it. But the thing is, you need to back test it. You need to back test it and train your mind for it. And literally, you don't even have to box it. You don't even have to mark it up. You can just see it. Hey, it was the area value. I'm going to be bearish because the 4-hour time frame tells me I'm bearish and I'm selling. That's pretty much it, guys. Like, literally it. All right. And I'm going to leave off on it right there. I know I'll probably talk to you guys' ears off, but at the end of the day, it's crucial in my eyes that you guys get this, because being accurate in the market, it's not going to hurt. It's only going to make you better, and it's only going to make your returns that much better, right? And your overall experience that much better. So with that being said, guys, I hope you enjoyed the video. Like I said in the beginning, drop a like, smash that subscribe button if you're new, hit that bell button so you do not miss an upload, right? And I'm going to see you at the top because the bottom is way, 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 way too crowded. Peace.